Go Digit General Insurance. Well, this is one of the most promising insurance companies present right now. Why is that? We are going to discuss in this video. I will do the analysis from every aspect, and by the end of this video we will arrive at a conclusion that if this company, if this stock is worth considering for investment or not. I will do the fundamental analysis, its growth, future growth potential, and then the price action at the end, so that we will get a complete picture. Okay, but please remember that this is not a stock recommendation video. Please do the buying and selling of stocks based on your own risk appetite, not based on my opinion and advice. Okay, so with that said, let's get started. Okay, hello everyone and welcome back to another video of Financial Impulse. So this is Go Digit's official website, and as you can see, we have it is providing insurance for multiple products: car, bike, health, commercial, then travel, home, and others. Okay, and I will definitely suggest that you go to this website and check it out and see what are the plans it is offering, and also you can try this website from the point of view of a customer. Okay, like you want an insurance policy and you can give some details and then check what is their premium, what all things they are covering, how much amount they are providing as insurance, sum covered. Okay, all these things, and you can compare it with its peers. Okay, HDFC, Argo, many others are there, SBI General Insurance, Health Insurance, and many. Okay, so I will definitely recommend you do that. And now let's go and see the investor perspective. Okay, so I have opened ticker tape, and in ticker tape I am not going to check much. I will directly jump to this revenue forecast and earning per share growth forecast. So we can see the revenue forecast for the stock is looking very promising for the upcoming year 2025. You can see the low is 32.55, median 33.85, and high is 35.15. This is the revenue forecast for the upcoming year for Go Digit Insurance. Okay, which is looking very promising. Now earning per share forecast. So if we come here we can see some fantastic potential. Okay, for the stocks, the low is 112.29, median 131.07, and high is 153.13. this is the forecast per earning per share growth. Okay, which is looking massive. This is clearly telling that this company is expected to grow rapidly, and the earning per share will obviously rise. This is what is expected from the company. That means the business is going to do well in the upcoming years. Okay, this is the forecast from ticker tape. So that is all here in ticker tape. Now we'll go to the screener and see some basic details about this company. So we can see that the current trading price of the stock is 396, market cap 36,458 crore, reserves it has is 1821, and a debt of 350. That's why debt to equity ratio is very good at 0.13. 3 years average sales growth 47.78, which is looking very good. 3 years average profit growth 51.54, average earning per share growth 3 years 50.36. These numbers are looking fantastic, and if you compare it with its peers, okay, you will see these numbers are the highest. Okay, these numbers are almost the highest. Right now current ratio is 0.10. obviously this is not a general, we cannot measure this parameter like normal companies. Okay, this is an insurance company, provide loans and all. Okay, operating profit margin 2.74, and you can see this is kind of the median. Okay, you can see SBI Life Insurance 0.41, HDFC Life Insurance 0.42. so this is this parameter also cannot be judged with normal analysis. Now if we take a look at the P ratio, it is 200, whereas the industry P is 52.85. Now you might say that this is highly overvalued and should not be considered for investment at all, but at that place you will be wrong. Okay, actually these are the stocks that we should be highly focusing on because they are having a lot of demand. That's why the P ratio is high. The investors are ready to give pay high price for this stock. And you can see the other stock where the P ratio is very high is ICICI Prudential Life Insurance, then we have HDFC Life Insurance, SBI Life Insurance. So these are the things. So I would say that you directly cannot jump to the conclusion and ignore the stock just because the P is more than industry P. You will miss out a big opportunity. Okay, now let's see the 3 years average sales and profit growth. So we'll consider the 4 years because we have the data available only for 4 years. Okay, from 2021 till today. Okay, we can see there has been a huge increase in sales. You can see 2252 was the sales in 2021, which went up to 3841, then 5269, then 7269. So massive growth in sales. Operating profit minus 114, it again came down to minus 283, then it went to positive plus 50, then plus 199, so almost 200. And same with operating profit margin, it went from negative to positive. Okay, and if we take a look at the earning per share, there also we are seeing growth. Okay, minus 3.44 to 0.41, then 2.08. So here it is 5 times jump. So that's a good thing. Now let's go to the shareholding pattern, and here you will see very interesting something very interesting. You see the promoters after the IPO is listed are still holding 73.58% stake in this company. That means they clearly did not want to give away their shares. Okay, they are holding the maximum amount permissible. Okay, so that is 73.58. So maximum percentage is 75. So they are holding 73.58. FI on the other hand is holding 5.10. DI is holding 16.22. So these are excellent numbers, I would say, and the public is holding just 5.10%, which is very good. Okay, and we do not have the data of other quarter, previous quarter, so that's why we cannot compare its performance from the shareholding pattern, that if they are increasing the stake or they are keeping it constant or they are reducing. We do not have that information, but still looking at the shareholding pattern, we are seeing some very good promising numbers. Okay, now we are going to check the price action. So I'm going to check the price action here. Okay, this is Go Digit General Insurance, and this is the 1 hour time frame. So first of all, I'll switch to weekly time frame. Okay, so in weekly time frame, I can see that the stock is the first week itself after getting listed. Okay, it gave one green candle. Okay, but with a long wick, then the wick was broken here, and then the sideways action started. So we'll get a better look when we go to the daily time frame. So here I am at the daily time frame, and I can clearly see that this level was acting as resistance multiple times. That's why I have drawn this red channel type pattern here. Okay, and then that was broken here, and now it is consolidating. So what is the clear output from this scenario? So we can clearly see that this resistance level, although is broken, but still we are not able to identify where the proper entry point is. And in order to identify the proper entry point, we can switch to the 1 hour time frame, and this is the 1 hour time frame. And what do you see? You can clearly see that the stock is starting to show strength near these areas. Okay, it did come to this level around 407, then came down again it tried to go up here, and again today it came down. The 1 hour closed here, and now it is going like sideways. So what I expect the stock to do is, it will go give a pattern like this, and then finally give a break above this 407 410 level. So what I am going to do is, I am going to mark this level. Okay, Alt J. Okay, and this is the place where we can keep an eye, where this this is the level where you should keep an eye to mark a perfect entry. So we have to wait for the stock to go sideways and then break above this level, at least in 1 hour time frame, one candle above this, and then the second candle should also close above this, and then you can make an entry in this stock. Okay, and if I go to the daily time frame once again and check the RSI, these numbers are looking good. If I go to the 1 hour time frame and check the momentum indicators, then I can see that the MACD is staying above 0 for quite some time, and I think it will go a little bit sideways and then give a crossover and go up. And same with the RSI, one little bit of more swing and then it should go up. Okay, so that is all about Go Digit General Insurance. I would say that this is a fundamentally strong company, and if you are looking to invest in an insurance stock and hold it for for a long term, okay, or at least 6 months to 1 year, okay, then definitely you should consider Go Digit General Insurance. We have already did the analysis that the stock is having very good growth potential, and also the shareholding pattern is looking very strong. The price action is also looking strong. So all the factors are looking on the right side, and definitely it should be considered for investment. But again, repeating myself, not a stock recommendation, right? So That is all about Go Digit General Insurance. Please hit the like button, share this video with others if you found it valuable, and subscribe to Financial Impulse if you have not done already. And if you are already a subscriber, consider joining the Financial Impulse community, where you will get more stock analysis post. Thank you for watching. I'll meet you in the next one. Bye. Take care.